All right, good evening, everybody. It is Thursday the 15th, if you can believe that one. 15th of February already. Let's take a look at SSO. All right. Now, remember, we kept half of this position. Remember, we entered a third here, and another third way down here. Beautiful, beautiful. All based on the timing of that 2-bar RSI, okay? Now, of course, that first entry wasn't the greatest entry. That's why I spread them out into thirds. But again, we've talked about this already, right? A third's fine. But the way I typically do it is I go, so again, let's do it in a percentage because it's easier that way, right? I do the first 20% of the money that I allot to a certain trade. 20% first entry, right? So it'd work 20% here. All right. Again, the second entry, again, it's got to close below 10 rather on the 2-bar RSI. So that would be a 30% entry. All right. So it's 20, 30%, and then 50%, right? Because that adds to 100%. So if you, again, right, 20, 30, and 50, okay, and then 50 would be right here, so it gets weighted more heavily as it drops, right, which is a good thing, okay? And so that's how this is a really, really solid strategy and works. And again, you're only going to average in this way if the trend is decisively up, right? So a real easy way to determine that is, are we trading above the 200 moving average? And if we are, okay, and we get the pullback with this criteria, then you would take this trade. Now, index, ETFs, and stocks, even ETFs and stocks, are mean reverting, okay? They do extremely. So I just urge you to look at a bunch of markets and just take a look at what I'm showing you here, okay? Really, really solid. Again, you've got to be above the 200. A lot of the questions I think about is, that I get rather, is, well, what about selling the market? What if it's overbought? Do you sell it? Now, look, I cannot fight a bull market. I'm not going to short in a bull market. I don't care how overbought you get with the RSI. But if we're in a bull market, and we get that extreme oversold reading, and we enter and have a methodology to apply like I'm showing you here, that works, right? Really well. Now, if we break down, start closing below the 200 moving average, right? And we're below it, and you get a pullback, and then you're above 90, but you're below rather the 200 as you get that reading above 90, then you can short it, okay? So I just wanted to go through that real quick. So again, it was a good thing. We exited half the position. We're still long half the position. And so we are up pretty nicely, okay? Overall in the trade, actually. Even though we took off half and we lost just a little bit, we kept half, and look at the market's up. Really strong here, okay? So the way I'm trailing this, I'll be honest, I'm going to start using below the lows. So today's low, right, it was a nice bullish day. We opened up higher. We sold off actually in the morning, and we actually came back. If you look at an intraday chart, it's literally a V, right? Market sold off after gapping, filled the gap, and literally up like this, okay? So very strong. So my stop on this, a resting stop, would be below Thursday's low on this, okay? Let's take a look at Twitter. Been long Twitter for quite a while. Of course, we got a gap last week here. Nice earnings, right? So again, Twitter, really, really solid trade. I've got a double in it already. I am long at an average price of, let me see. All right, paused. I had to look at my account. My average price on Twitter is $16.37. So that is a great trade. We've got a double here, right? So I often get asked the question, well, you get a trade going like this. How do you manage that trade? Good question. Now, again, I put this trade on, assuming this was a bottom in place. My initial stop loss was right below, on a closing basis below those. Here, let's take this off and go through it. Let's go through a little lesson here, okay? Again, we started basing. We were trading below all moving averages, right? Down in here, as you can see, trading below the 200 and everything. 1637, but I took a stab right in here with a stop. Remember, when you enter the market, any trade you take, you need to have a catastrophic stop in place. And my stop was, this was my game plan. If the market had closed below this lower low in here on a closing basis, then I would exit the next day if the market were able to take out the low of the bar where it closed below this low, right? And so when it broke up, kept the trade on. When the market came up, it matched this high. My stop then moved to below this low, right? And then I'm looking for this high to be broken. It was broken here on the gap. Now my stop moves up to below here. Okay, look at this. See how this is just a nice wave to the upside? Now we're really starting to move away from these averages. The averages are starting to slant higher. Very nice. We take out this high here, right? Now I move my stop up again below this low. Market comes up, takes out this high right in here. I move my stop up again to below this low, right? All good stuff, right? Makes a new high. Okay, I leave my stop right in here, which gives me room to breathe. Came down, up. Now when we came up and took out these highs here, my stop moves to below this low. I call an active low. If you're a student, you know I call these active lows, significant lows. Now we're up. Okay? Now how do I trail it? Well, I'm going to watch this very closely. I'm not going to put my stop below here. I'm actually going to put it about 50 cents below this high right here. Right here. Okay? So that's how I'm going to manage that trade, okay? And that's how I typically do it off of dailies, looking for a bigger move in the market, okay? Gold's right back up again. I've been long bullish since right in here, if you recall. And again, SSO we went through. No, Tesla's a good trade. Remember this trade that we had on, that we put on? We took off, remember this? This inside bar, when it took out the high of this inside vertical bar at 318.08, right? When it took that high out, we went long. Look at it. Now we're running into a little resistance here. I'm going to watch and see if we can break through these levels tomorrow, right? This is a big level for me. But right now, you know, you're long right in here. My stop, well, this is a pretty big day. Closed right on the high. My catastrophic stop for this now is going below Thursday's low. If we can break up through the high, I'll probably move my stop up to below the 60% retracement of this big swing, so it'd probably move up to right in here, and watch it very closely. Let's look at two new potential trades. Okay, one is whatever this is. I don't know what the date. Trupanian. I don't know. TRUP. Market sold off nicely. Take a look at the RSI. Right, we've been oversold. We popped up a little. We're right back down. This reading is higher than this trough here. I think we got a spike. We got an inside bar. Wait for a penetration up through the high of the inside vertical bar. I'd be looking to go long. Okay. If the market takes out the high first, yes, I would be long, and then my stop would be below that low, the low of the inside vertical bar. Same thing on BG. BG, we came down, nailed this moving average on an intraday basis yesterday, bounced up nicely, have an inside vertical bar. I'm looking for the market to penetrate up through that inside at 77.54 to 77.64. Takes that out, I'd move my stop up right here. It'd be my catastrophic stop, looking for a move back up. Sorry for rambling so much. Have a great evening. I'll be back with you tomorrow. Bye.